Good morning. My name is Scott Rudd, the Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mixed markets around the world today. Europe is higher as the DAX is up about 1%. In Asia, the Nikkei is off about 0.5%, and the Shanghai Exchange is up 1%. Seems like we kind of have the same picture overseas as we were looking at last week, right?
Yes, a little bit mixed, taking turns. And Europe was very oversold, so finally it's getting a bounce. And in Asia, it's still mixed because in Japan, you have the yen, which is still very strong. That's why it's off about 0.4%. And you have the Shanghai Exchange up about 1.6, back above 3,000, which it's been playing with. So no real headwinds from overseas, but the tailwind isn't that strong either. If you look real quickly here at the EWG, you'll see what I'm talking about with the DAX being oversold. First of all, it's still in a downtrend. It's still below the 200-day. But from here to where it broke out from, a little spot that could have been a buyable dip. At this point, some will say that's a higher low, okay, and that perhaps next time it gets up here, it might be able to break this trend. At this point, we shall see. You have a gap to be filled here in the EWG, and that comes in a little right around 25.38. So this would probably be a spot that if you bought on the dip, maybe trim a little bit, and then if this is the recent low, and if this low sticks, then you'll probably start seeing some tailwinds out of Europe. As far as China, really not much to go on with the FXI. It's been holding higher. You look at the size of the move that it's had from the top all the way down to here. It didn't really break down like some would thought, but I guess you could say now for the week, you take a close look here. As long as the FXI holds above, maybe we're above 32-ish, perhaps it stays intact and kind of neutral. If China gets going, the FXI would need to take this out, and then the 200-day is north around 36, 37. But for right now, kind of in line, in this consolidation, in this little channel here, where it's not creating pressure by breaking down, but it's also, not really, taking off. So we'll see how much longer that has to last.
Last week was a pretty random and erratic one, with the S&P pulling off about 1.2%. What do you think here? Is it a lot of the same? S&P are up 6 to 7 handles. What are your thoughts?
I hope it's not a lot of the same, because traders don't like erratic and don't like random. But when you're in upper range where people aren't sure whether we go higher or correct, that's what happens. So I'm going to try and take it one day at a time. If you look here at the chart of the SPX, you will see that in this little upper range, which we've been in, all in all, we held the 21-day. But within this, you had like a weak close, and then it took out the shorts, looked good, and then opened lower and knocked out the longs, and then Friday opened up and came in. At this point, futures are up 6, 7 handles, so we'll see, can it get above this, which is 2060, and hold above it for perhaps higher prices, or does it make another lower high, and then at some point, take out the 21-day, which would then, really not much, downside, but would give you probably a move to the 200-day, which is a little bit closer to 2015. But all in all, some guys are saying this is, faulty, that you have these erratic moves that creates distribution, and some are like, listen, look at the size of the move that it's had since the double bottom here, and then taking out resistance here, and it's been, riding it for almost, actually, what is this now? It's about 7, 8 weeks. So to go sideways a little bit with a little bit of a downside slope wouldn't be the end of the world. Look what happened here when it finally, topped a little bit, came in, got very, very choppy. It was choppy for 2 months. So if this is the start of the chop, then just be very careful trying to buy highs or short lows, because I did that a few times last week and it didn't work out so well.
Most sectors lost their 8-day but held the 21-day. Can you go over the landscape and technology, small caps, and bios?
All 3 of them, huh?
All 3.
All right, so let's take it one by one. First, the Qs, which got hit last week. Still hanging around, but you have well-defined support. You look here at the Qs and you'll see, this is what I'm talking about on the chart. You have this upper level right here. So I'd say as long as the Qs don't trade and close below 108.50-ish, you can't get too bearish, but all in all, you got to be a bit careful of the size of this move. So here's your defined support. Here's your resistance. At this point, it's still just in the channel, and it's above the 21-day and just kind of losing the 8-day a little bit, which it hasn't done for a while. So we're just trying to figure out, is momentum on a smaller scale being lost. And at this spot, you could say a little bit, but not falling apart. This is support to trade against this week. Then you go into the Russell, same kind of thing. The Russell, the IWM, which is a small caps, had a decent move off the lows. This is a bit of the bigger picture, of it. Last time it broke right here. It actually broke so many different areas. But anyway, now after this move that took out this 102 area, it's starting to just get a little falter, or not. I wouldn't even say falter. It's digesting. And the problem as a trader is you don't want to get caught if a level like this breaks when you're trading for alpha, because we're not trading for multiple months here where if it breaks this, you hold your nose, go in the water for the 50-day and then come back up, and it's hard to deal with. So at this point, it's still hanging around, holding the 21-day. If you want to use a pivot to trade against, you have it right here. This is 108.13. If the small caps want to get going again, then perhaps it could take out this 110 area. But all in all, very, very choppy, but again, hasn't fallen apart yet. We'll have to see, does this break to the downside to get a move down to the 50-day, or, was this little corrective week the week? I guess we'll see as the week unfolds. And lastly, the bios gave you really good 2A action. We talked about the breakout above the 50-day here, and then you had a little red dog reversal right there where it pushed above this high here of 285.86, went 2 points higher. So some people who were looking for a cute short, considering it came from 260 to the 280s, you had a nice 2-day short. So now the question is, does it hold higher here for another move in flag? So what you want to do is you want to write down 274.83, okay, which is the 8-day, which is what it's been above. So maybe they try and sell it and then come back above it, and then you get yourself a nice entry. If you sold 285s, you have the opportunity or the luxury to buy 274s if this is to hold. If it gets below this and stays below this, then that might give us some clues that the market has some underlying weakness.
This week, earnings season starts, led by Alcoa tonight. But what's really important is how banks respond to this. And JP Morgan kicks off Wednesday. What do you think there?
Well, the banks have been the biggest laggard sector. They're getting crushed as far as when the market doesn't move, they can't get any fees. So if you have 20, 1.5 and 20 or whatever their structure is, if the S&P, which is almost flat now for 2 years, they're not getting they're not making people much money as this is consolidated the last 10-year move. So anyway, you have that. You haven't heard the word IPO in a while, so there's been no IPOs, no real deals. And trading hasn't been great. Volumes aren't high. So, how could they thrive in this environment? Just the question is, do they get a relief rally, or is it that bad that they get sold? But we don't have to really worry about this until Wednesday, because Wednesday is when JP Morgan comes out. But for now, if you look at the XLF, you'll see here on the chart that, it's already below the 8 and 21-day. But it's not a complete headwind at this point. I would say if, the XLF start to get below this 21.85, perhaps, it'll be a bit of a headwind, but I guess they're not going to probably do much with this until Wednesday. And Wednesday you have JP Morgan, just to take a quick look, not acting great. Okay, it's below the 8-day, the 21-day, and the 50-day. So I guess at this point, though, coming into the week, your weekly support pivot is 57.06. If it gets below 57.06 and starts to head lower after earnings, it's probably going to pressure the broader indices.
In high beta tech, Facebook lost some momentum, creating anxiety around some other names. What do you think about Google, Amazon, and Netflix? Well,
when all these are like the high beta names, the FANG names, then tend to move as a group, even though they take turns. So when Facebook lost some momentum and lost the 8-day and the 21-day, I think some of the air got out of some of the other ones. So at this point, I don't think it's game over, but things have definitely changed. You've been able to make money, 2 ways. If you look here at Facebook, you'll see, basically, if you remember, on this day, all of us thought game on, right? This was game on. Here's your 8-day moving average. It held, okay? Kind of getting rid of this ugly candle. And then the next day, you had the downgrade and the put off of Oculus. So boom, that got me out, and that got some people saying, okay, we just broke the 8-day moving average. Let's be a little bit careful. You did bounce back a little bit, okay, to retest this spot. Had a doji, okay, and then on Friday, boom. Okay, so some people are thinking that's it for this until earnings, where you have to be at least careful because this trend broke right here. If you were looking to be short, you could add a nice short below 103. It now lost the 21-day. So at this point, it's a 2-way trade. what you know is the low here of 109.90. So I would use that. It's up 40 cents. See if they try and sell this. If it breaks below, hold the 50-day, comes back above, maybe use this pivot as an entry for a scalp long. That's probably my plan with this. I'm not going to fade it or short it off the bat just because it's come in a lot already. I'm going to see if it can get into here in reverse and get a decent entry. But as far as some of the other names, Amazon still looks all right. Hanging in here, getting tight. I don't know if it's going to do a move prior to earnings or wait for earnings. So I would say as long as Amazon stays above this 585, it's in the game for a move higher. If Amazon starts getting above 600, I think some traders will probably start trying to grab that for a move, and that'll show us that maybe the markets have a better appetite for risk. And Google, I'm just going to probably just know what it's doing and avoid it because it's getting really, really choppy here. It hasn't fallen apart yet, but I guess if it trades below 755 with some kind of force, perhaps it'll go lower. And I don't know if anyone's going to have the wherewithal to buy it again, but above 770, it goes to the upside. So these things tend to move on earnings, and Google, Amazon, and some of those names don't have it for another 2 weeks. So try not to get chopped up in these little ranges.
Apple was on the front cover of Barron's saying it could get as high as 140 next year. How does it look technically to you?
It looks still okay. It lost a little momentum last week. It got rejected at the 200-day, but it's still above the 21-day. And Barron's tends to be a bearish magazine, so for them to come out bullish, I at least read the story on why they said it because I do trade Apple. There's also some news out there that less people are buying Apple products in Apple stores, so it's not great for their margins. So, you can have a push-pull here. All in all, it's participated and it's worth noting. And if you look here at the chart, you'll see that, when it went back on my radar, it was pretty much right around here where you had a nice tight move, broke up, and then the most important was that it held. Okay, then you had a nice little bull flag here. Remember that nice trade? We went long overnight, and since then, it's been trying to hold, this upper support. So at this point, what do you know? You know that last week's low, I'll make it a little bit bigger, so so we could see it, was I think around 108.20. So, here it is. Yeah, this was last week's low is 108.10-ish. So as long as it stays above that, it's consolidating well. If it were to break below that, the 21 days all the way down here. And for today, if the market wants to stay strong, maybe there is a trade here if it were to take out this 109.77 and start working its way back up. So at this point, it's come in, hasn't fallen apart, and every time it's had these flag type patterns, it's gone up to the upside. So maybe we'll see if that changes or continues, and it's worth noting for the overall market.
Last Thursday, we warned that they might sell the news in the Tesla event, and for 2 days it's pulled back. Do you think you'll enter it in the 8-day moving average, as that seems to be kind of a trend right now?
Yes, it's been a strong trend. So I was hoping for like a down open today in the market because after 2 down days in Tesla, you figure the third could be viable. We did talk about how they were coming out with another round of reservations, and this time it probably gets sold, and it did actually not a red dog reversal to the downside. So let's take a look. Let me show you what I'm talking about. First of all, it's been on a tear. It's been electric. Anyway, excuse my pun there. So this was your V bottom. Okay, right here was when Citron came out and said it's overvalued, and most shorts got caught. Then you had your first move up, and here was your 3-day down move where you had a nice little reversal, and then it held this platform. And then right here, okay, it went above this 267.74, not by much, by 2 points. So if you shorted there, you did okay. And then it opened up on Friday, okay, and then traded below this pivot, so give another people another entry for a short. And now today it's up by 2 points. So what I'd like to see, hopefully, is maybe they come in, they try and sell it, break this 248, and then find some support and come back up, and then that could be your entry. But we shall see. I'm not going to probably fade the open. I tried fading it on Friday. It was okay. The downside was really better later in the afternoon. And some of you guys that are still short from the red dog reversal, just stay with it. And if it gets back above this 254, just be done with it. You got to look to the left to see where the old highs are, and just put some perspective. This has been an enormous move. So a pullback like this, isn't so off base. It actually could even go a little bit further. I would like to see it maybe pull back to the 21-day and let this play some catch up. And that would be a little bit closer to 238, but we'll see.
Metals have been consolidating for multiple weeks now. It seems like GLD has a perfect bull flag setup. What are your thoughts there?
I wouldn't quite say perfect, because nothing's perfect, but
Right.
but a nice one. So that did get me long it on Friday, and I haven't been long, gold in a while. So what am I going to do with the GLDs up 90 cents? What I usually do is if I'm long a certain amount, I sell a little bit pre-video just to book it, and then I see what kind of composure it has. So if all of a sudden the GLDs open up 90 cents and pulls in only 10 cents and holds, then maybe I might even get more than I had overnight for it to take out the 30-minute opening range and then see what's next. If you look here at the GLDs, it basically held the 50-day the entire time, building up a nice upper floor after a big move. So I was thinking it would be a start to get above this 119, and if you can get above this and stay above this, then really your next level doesn't happen until about 122. So it's already starting to take out this little descending channel here. You could draw that within the flag. So at this point, it really needs to hold above 1885 to start getting some traders really excited about it, that maybe it goes back to highs. But all in all, looks pretty good. It's been led by the miners. The miners on Friday had a really nice breakout. If you look here at the GDX, it's had a big move too. Like, look at the size of this move from here, and then it took out this pivot, and then in here, remember we were talking like, will this 119 hold? Well, it did, and now it's already at highs of the year. So the miners have are leading gold, so we'll see if that continues. At this point, I would say up 30, 40 cents, you probably want to trim some GDX. I wouldn't start a new position up here, and I would write down 2155, which is Friday's high, to see if it opens up and comes below and then needs to let these moving averages play some catch up. So a little bit extended there.
Bonds are off a bit this morning. Where do you think the 8-day is for the TLTs?
A lot of people are saying that negative rates around the world, our Fed can't do anything, and the TLTs have been a vehicle to use for those different types of mantras. And at this point, if you look at the TLTs, you'll see you did get a little bit of a pullback on Friday, and it's still above the 8-day. Basically since clearing this spot, it's been following it, so it's good to know when it gets there. So at this point, if you want to take a look, I think the TLTs are down like 40 cents. So if the market starts to reverse a little bit to the downside today, maybe this is buyable for you around this 131, because if you sold the strength at 133, why not try and buy the 8-day, which has been the better buy in the past 2 weeks. And then if this were to break, then you just have to be careful that the trend lost some momentum, and then perhaps you have to look lower.
Do you have any other closing thoughts as we start this new week?
I just think a lot of guys, got a little chopped up last week because, you close strong, you take out longs, and the next day you're down 10 handles, and then you go down 20. So it doesn't, there's no continuity. Same way you close weak, open up. So, that kind of action could definitely drive some traders a little nuts, or just, get a little frustration. So for me, I know I was somewhat frustrated last week, so I'm trying to come into this week to figure out, what's next. Do we hold above the 21-day? Do we hold above 2033? Or do we break below it and see the 200-day? Does high beta tech continue to have momentum, or do they start, faltering a little bit, kind of like you saw Facebook falter? Facebook, it's not the end of the world that it went down to 110 after coming from where it's been a few years ago. But again, when you trade for alpha, you want to be right on short-term direction. Oil's had a big move on Friday. Let's take a quick look at the USO. You want to see if this gap holds. It was oversold and made a nice move, and now you'll see whether or not all those gains stay in. So if you look here at the USO, just to show where that gap starts. So the gap starts at 993. If oil wants to come in a little bit, maybe that'll bring the market in a little bit also. And there's a big 50-cent gap there in oil. And really, that's it. Earnings season starts. A lot of talk that we're in an earnings recession. And the only reason why the markets are up is because of stock buybacks and financial engineering. And these are just this is the way the market is now, the new normal. So there's nothing we can do about it except for try and participate. So we'll see on Wednesday if JP Morgan's earnings are horrible and the stock goes up $1.50, then you'll know that the move in the banks was priced in, and that the market probably isn't going to go much lower. If the report comes out, it's not great, and it goes down after being lower, then you'll know that there is some weakness and perhaps you need a little bit more care. So all in all, take the week, start it off slow. We'll see if this gap upholds or not.
Great, thank you. Have a great trading day, everyone.